Hey, welcome to the 40 Finance channel, everybody. Today we're going to go through the stock screener on Seeking Alpha and try to find some names that are growing revenue and EPS at double-digit growth rates. Obviously, with the economic conditions going on and interest rates, it's not easy to find companies that are growing both their revenue and their EPS at double digits. And I'm going to make the formula even a little bit more complicated. I'm going to demand that the revenue growth this year is higher than last year. And believe it or not, even with those tough metrics, I still had hundreds of stocks to sort through on the stock screener. And what this really does is this isn't necessarily stocks that you drop what you're doing and buy now, but it allows us to identify who is growing top and bottom line, at least based on projections. And then from there, you got to do another level of research. But the whole point here is to get some ideas to dig into, maybe add a couple names to your watch list. And so let's jump in and see which names we uncover. Okay, so as always, we're going to be using Seeking Alpha Stock Screener to comb through these metrics, one of the best stock screeners out there, in my opinion. And if you're interested in learning more about all of the features that Seeking Alpha Premium has to offer, my affiliate link is in the description. It gets you 50% off a full year subscription to Seeking Alpha Premium. Comes out to be less than $10 a month. If you like what you see as we go through this video today, you can potentially support my channel. Use my affiliate link in the description. Get yourself a nice deal. Now, what I have set up here, this is actually a custom screener that I made and saved. You can see it says plus 5% on top and bottom line. That's just the way I named it. But as I go through these filters, we're going to adjust them accordingly. First of all, we've got United States as the companies that we're looking at. I did a handful of sectors and industries: industrial, consumer discretionary, staples, healthcare, infotech, communication services. I do not typically cover things like energy stocks, utilities, REITs. Their valuations are significantly different, how you look at them. To be honest, most of the growth names are in these categories. Also set up a market cap filter. You see here at least $1 billion in market cap. Keeps the penny stocks out of the equation. And then from a valuation standpoint, we want to make sure that we have a PE. So I did PE from 5 to over 100. And then this growth number is year over year. So I did set this one up because I want to make sure that the company was still growing revenue last year, because that'll eliminate a lot of bad actors, so to speak. But what we really want is this revenue forward, and it's plus 10%. So plus 10% revenue growth projected. And then, of course, on the EPS line, we want to see plus 10% growth as well. And you put that all together, and you actually get, let's see what this says here, 216 results. If we sorted by market cap, it would bring up some of the big names. So Microsoft, Tesla, United Health, Broadcom, Salesforce, etc. Those are all worth looking at. But just for fun today, I'm going to go and focus on the highest growing growth rate, if that makes any sense. So we're going to take our revenue growth forward. I'm going to sort it here. Give it a second to compute. And what I really want to see, because we're going to start at the top on revenue growth out of these 216 stocks, what I really want to see is exemplified here by GTLS. I want to see revenue growth forward higher than revenue growth year over year. So if you think back to maybe Microsoft, I'm just going to do this off the top of my head. Microsoft grew X amount last year. More than likely, and I didn't look at this to confirm, more than likely their growth rate is projected to slow this year. Now, does that mean Microsoft's a bad company? Of course not. They still made it through an impressive filter of double-digit growth on both the top and bottom line. I want to sort this for this exercise by exponential growth. Now, of course, all these numbers are based on revenue and earnings projections. There's no other way to do it, but you have to start somewhere in your stock research, and so we start with the metrics, and then we dig down into the story and see if it's a reality. I think for the first two, I just started with these first two names, that we're going to highlight. And you can see right off the bat this Shoals. Shoals Technology, technically it's not growing revenue more this year, but when you're at the plus 50% level, it's at least intriguing. And if you go over to the EPS line on Shoals, no growth year over year, so in the past, but forward is plus 65%. And then you take this GTLS, they had 33% EPS growth last year, and now they're looking at plus 63%. So these are the kind of companies that you're going to see on the board. I just wanted to demonstrate like how I filtered it further before we jump in. So let's kick things off with Shoals Technologies. This is not a company that I was aware of, and just to be fully transparent here, all of the stocks, as I browse through, all of the stocks on the board today are not stocks I own. Okay, this is a simple stock screener exercise just to highlight some names potentially for you to research more. Shoals Technology Group, I don't even know what they do. So let's start with that. Shoals Technology provides electrical balance of system solutions and components for solar, battery energy, and electric vehicle charging applications in the United States. So I'm going to take that to mean some sort of, wattage control or software that goes into solar, battery energy, and electric vehicle charging applications. But let's get down to the brass tacks from the metrics standpoint. And in order to do that, we are going to go to our earnings estimates, and let's see what we got. So their fiscal period is ending December of 2023. Current estimate is 58 cents. You got a low of 45 and a high of 90. It's across 15 analysts, so pretty good coverage for a stock like that. And this is 56% growth if they hit this number in 2023. It's also 73% growth next year if they do reach $1. Now, looking at this forward PE today of 35.76, that may or may not be high compared to the rest of the industry. We'd have to go a little bit deeper to find out. My eyeball view at this amount of growth is it's not completely unwarranted at a 35 times on the forward PE. And if you were to get in a stock like this that's growing at this rate early enough, well, then by 2024, if they hit their $1, you're at a forward PE of 20. So definitely worth a watch, in my opinion. Let's check on revenue. So revenue looks strong as well. So this year, if they get to, call it $500 million, 51% growth. Price to sales close to 7 isn't the cheapest stock you'll ever find, but they've got another 45% projected for next year. So that starts coming down pretty quickly if you get into a buy and hold situation and potentially look to get something like this on a downward movement or maybe a red day on the stock market. All right, the next one on the board, GTLS Chart Industries. And this is really interesting because Seeking Alpha Quant Formula has a pretty strong warning on it. High risk of performing badly. But when I looked through here, I wasn't even going to include it. It's interesting that Seeking Alpha authors had strong buy, and Wall Street has 12 strong buys and 3 holds. Now, this is a stock that manufactures and sells engineered cryogenic equipment for industrial gas and clean energy markets in the United States, crypto tank solutions, heat transfer, specialty products, repair, service, and leasing. So very interesting. I'd have to learn more about that industry. It's hard for me to even say how that market is looking right now. But from an earnings standpoint and a growth standpoint, let's see what we got. So their fiscal period is basically this year, December of 2023. You got 596 on the estimate, 36% growth, forward PE under 20. Next year, if they were to hit their projections, they're even higher, 1072, forward PE of 10. So interesting on that line. How's the revenue going? And this is where you start to get into a mixed bag. So you've got $3.6 billion this year, huge growth, 127%. But it does look like next year slows substantially down to 20%. So it could be, what you'd have to be careful here is this some sort of boom year or a one-off year for some reason that offers 100% revenue growth, and then all of a sudden growth slows or stalls? Perhaps that's why it got a warning from the Seeking Alpha Quant formula. You just have to dig in and see if it's worth your time. All right, next up we got Churchill Downs, and this is a horse race operator. They operate racing, online wagering, gaming, entertainment in the United States. Most people, I think, know Churchill Downs from, I believe, the Kentucky Derby. I think they are the host of that. But let's see what they've got going on in their business. And I'm on the wrong screen. I'm looking for earnings estimates. All right, here we go. December 2023. Estimate for this year, $11.35. That would be 41% growth. And what could be interesting, I don't know this to be true, but obviously online sports gambling has picked up significantly. I actually own DraftKings stock. Perhaps the story here is that it's impacting Churchill Downs profits and revenues at the same time. And if that's the case, at a forward PE of 22, it would definitely be worth looking at. How does the revenue look? All right, so December of 2023, $2.5 billion. That would be 38% growth this year. And then next year, you're still in double digits, but it does slow considerably. And my take here on this one is if it's tied in any way to the growth of the online gambling industry in the United States, I would say that most of those growth projections that are coming in at the corporate or analyst level, they've been under, right? They've been on the underside, and it has outperformed, particularly in the DraftKings situation. And you compare DraftKings to Churchill Downs, and what's much more attractive for most investors here is that you got an EPS and potential EPS growth. All right, next on the board, we have Boot Barn Holdings. And if you're not familiar, this is a company that runs brick and mortar stores. I'm sure they have an online offering as well that sells, guess what, boots, right? So we've got a couple out here in Cincinnati. Let's take a look at their earnings estimate. Obviously, the retail world is kind of in flux on opinions right now, which way the consumer and consumer discretionary will go. I'm relatively bullish on the consumer, but let's see what they got here in Boot Barn, and this is interesting. So you've got March 2023 as the end of their fiscal period. Okay, so essentially in a week or so, they're going to be done with their fourth quarter of 2023, and they'll be looking ahead to 24. So even though this is minus 12%, this is for a time period that's about to end here in just a few days. What the street is looking at is next year. And I notice right off the bat, we didn't quite get to that double-digit range. We grew double digits, but we didn't get to total growth above double digits. But $6.02 puts you at a forward P of 12, which sounds really low, but retail runs really low on the PE, so you have to compare that to the industry. How about revenue? Okay, and this is another flip-flop story. So this year, revenue was up 12%, which is a good thing. Not sure how earnings dropped 12%, but that could be a margin story. Then you get into 2024, you got 7.78%. So this is actually a rule breaker in terms of the screen, because, and they must have been looking at this year, but if we wanted to say true forward revenue estimates, at this point, the true forward estimate would be 2024, and in that case, you're not quite getting double digits. Overall, with Boot Barn, I would say, this is a positive, and this isn't that bad, and this number could go up to double digits. But you just got to be careful in retail, so make sure you're digging in and seeing what they have on tap for their 2024 fiscal year. All right, how about Palo Alto Networks? This is a little bit of a roller coaster, as we've seen out of tech stocks. You can see right off the bat, some lucky fella bought this one on Jan 9 for $136 and could potentially flip it plus $60 a share. Let's see where we're going to go from here. All right, so fiscal period ends July of 2023. You know, that's only, what, 4 months away. $4 and a penny, that would bring you to 58% growth year over year. But with this one, you're actually going to flip. The forward outlook is going to flip very quickly here, maybe around June or so, to 2024. And there you got 465, still double digits, plus 16%. Not as spectacular as this year, but still a good sign, still in double digits. How about revenue? Revenue strong this year for the next remaining months, 25% growth, and that's probably what my screener picked up on. Next year is not expected to be as good, but you still have time on this one for this perspective to change, right? So 21%. You could still match or exceed the year before. Nonetheless, you're talking about a technology stock here that has top line growth of plus 20%, and you got bottom line growth of plus double digits. The big question will be with all technology stocks, what do you think about a forward PE of 47? What do you think about a forward PE of 40? Some people would never pay that in this environment. I happen to know the Palo Alto Networks does quite a bit with cybersecurity. And from a long-term perspective, I would say, that's an industry that it's hard to imagine it's going to do anything but grow into the next several years. All right, next up, we have Allegro MicroSystems. This thing keeps showing up. It's one of the top picks of the Seeking Alpha quant formula. As you see over here, it's getting a strong buy from the quant score. I've covered it now, I think, in 3 videos, sort of accidentally, but they design, develop, manufacture, and market sensor integrated circuits and specific analog power integrated circuits for motion control and energy efficient systems. And so, you've got a lot of strong buys going on. You have this huge run up here, which would be kind of intimidating for me to try to pick this off, considering it has went from 30 to 45 here in just a few months. Let's try to figure out if there's any gas left in the tank. We take a look at this is another fiscal period that's ending here in just a couple weeks. All right, so they'll close the year. They hit 127. That will have been a 63% growth. Now, 2024 sounds far away, but on their fiscal calendar, March begins 2024. And as of right now, you only have 5% EPS growth projected, $1.35 if they get there. So sort of limited when you start looking ahead. How about revenue? Very similar story. Almost $1 million. When they end this year, that will conclude a great year of plus 26. But 2024, at least right now, $1.05 billion, single digits. Not to say that single digits is horrible, but I'd have to say, just looking at metrics alone, that this one's going to probably begin to stall out on the run that it's had here in the year, because at least from a fundamental standpoint, there's not a lot more coming to support where this PE and price is going right now. All right, last one, we've got Lamb Weston Holdings, and this is very interesting. This is basically a potato factory, literally. They produce, distribute, and markets value-added frozen potato products worldwide, global food service, retail, and others, frozen potatoes, commercial ingredients, and appetizers under Lamb Weston brand. Now, normally, I wouldn't even entertain a stock like this because you're talking about being tied to potato prices. And that can fluctuate, as we've seen with eggs, gas, everything else. And in my opinion, it also makes it very difficult to project earnings and estimates when you're basically banking on the market price of potatoes. But just for fun, let's take a look at these growth rates. Their fiscal period ending relatively soon here, May of 2023, so about 2 months. You got 389 on the bottom line, that's 87% growth. If they hit their projections as of today, for next fiscal year. So say in a couple months, they're going to come out with their revenue, or excuse me, their earnings report. And if they say 460s, that's where we're going. That's 18%. So it is double digits. Forward PE of 21. You'll have to do some comparisons. I would guess that a food manufacturer, forward PE of 21 or even, arguably 25 today feels a little high. But, that's when you're digging back into the industry and the sectors to see where does that actually stand. Now, revenue, and this is surprising. This is a good story for a food manufacturer. This year, if they get to 4.99 billion plus 21% growth, next year, 19% growth. So very impressive. You got double digits and double digits. The huge question, though, is what do those numbers, how strongly tied are those numbers to the market of potatoes? And I am not smart enough to tell you which way the market of potatoes is going to go. However, I will say in terms of watch list or digging in deeper, might be something here on Lamb Weston Holdings. All right, guys, so those are a few stocks that are growing on the top and the bottom line, and in most cases, their revenue growth is exceeding the growth that they did the year before. So very impressive stretch of metrics from a fundamental standpoint. The next step, if any of those names caught your eye, start digging in, using tools like Seeking Alpha, going to investor reports, seeing what are the CEOs saying about this next coming fiscal year. Don't forget to check out that special offer for Seeking Alpha Premium in the description below. Hope everybody's doing well. We'll see you on the next video.